This is episode 31 of Zen and the Art of Real Estate Investing with my guest, Matt Jones. Matt is a real estate investor based out of Minneapolis who specializes in investing in both small and large multifamilies. He is the CEO of Hawkwing Capital, a large apartment building syndicator. He is also the co-host of Pillars of Wealth Creation podcast with Todd Dexheimer. Matt, welcome to the show. Great to have you.
That's fantastic to be here.
Yeah. All right. Excited to talk to you. How did you get your first started in real estate investing?
Well, like a lot of people, I read Rich Dad Poor Dad, and that blew my mind. It kind of went from there. My first deal was a live-in triplex in 2015. So I lived in one unit, rented out the other two, and self-managed, and that went okay. And then saved up money until I was able to buy another triplex across town, and then self-managed that for a while. But then it became too much of a pain in the butt with my W-2 at the same time. So got property management, and then I learned about real estate syndication, which is, as you know, is scaling up. It solves all of my problems at the time. I no longer dependent upon my ability to save up money for my W-2 for a down payment on the next place. And I don't have to wait to scale up, trading triplexes for a 10plex and so on and so forth. I can just jump into the big stuff and use other people's money to be, have a piece of the bigger pie.
Yeah. Awesome. Let's go back to that original triplex. When you got that, were you aware of what house hacking was, or was it before that was even a term?
Well, at least I didn't know it was a term.
Yeah.
I knew of the concept. You live in one unit and rent out the other, so you live for free or cheap. And so, it was a while before I learned about bigger pockets, because I was kind of stubborn and thinking like, oh, I'm smart, I'm capable, I can figure this out all on my own. I don't need to be connected with the groups of other investors. I don't want to split the profits and whatnot. So, I am smart. I can figure stuff out, and it was going really slowly. That's one thing I figured out after a few years. It's a terrible idea to do it all on your own.
Yeah. So, what were the numbers on that first one? Do you know, kind of generally what you were doing? Or was this really your first foray into real estate as a whole?
Yeah, for my first foray into real estate, but at the time I was managing group homes for people with disabilities. So I saw this triplex as kind of an easy group home. The regulatory compliance was much easier than I was accustomed to. And I already did general maintenance here and there to save some money for the group home. So some of that stuff I was already familiar with. And so I just took what I already knew and used that to my best advantage on this triplex. Got it with a FHA loan. So
perfect.
Low down payment. And there weren't too many terrible repairs, I guess, because, in order to qualify for FHA, it can't be too bad of shape.
Yeah, and I think that helps you as a first-time house hacker to know that you're a little bit protected, even though the FHA sometimes it's harder to win. You have to get something that already is going to meet at least the requirements in the beginning. It's interesting though, your experience with group homes; those are kind of the original rooming houses, which is a form of multifamily in-house house hacking. You think that helped you kind of know a little bit more in terms of multi-room structure and how else you could make money there?
Yeah. Seeing how, understanding how to work with contractors and vendors. And I think with real estate, most of the people in real estate now, didn't start in real estate. They came from somewhere else, like me. And so you have to take whatever your strengths are and your knowledge and your capacity and use that to your advantage, and then find other people to fill in the blanks from there.
Yeah, I think that's a great point. I think there's a lot of people kind of waiting on investing, thinking it's too late for me to get into it, or I don't have the skills. We all have skills from our prior jobs, whatever they are, or just knowledge, things that we are good at. Contractors can do that. Other people who've dealt with data crunching can do that. You take that and put it in, and then you find out okay, I do have stuff to learn, which I'm sure you found out, but you use your skills to kind of push that part ahead quicker.
Yep. Exactly. And stubbornly, I tried to do more on my own than I really should have. Did a lot of YouTubing and Googling, how do I fix this? And oh, yeah, okay, this I can do. And oh, you need a bunch of specialized equipment for this thing. I'm going to hire that.
That stuff. Yeah, that's interesting. I do think that a lot of people want to do the DIY, but I think it usually comes back to haunt us all. I've learned, my dad was a DIY renovator, gum in the hole of a wall. And I would just want to pay someone to do it so it doesn't come back to haunt me later. So that's a good point. Now, obviously, you don't have to do that. Are you finding that the use as you were scaling of property management helped you kind of back up a little and then not create errors on your own where you have to go back and keep fixing the same thing?
Oh, definitely. I mean, jumping into hiring a property manager was a great use of my money and time. You kind of touched on it, right? You can either try to do it on your own and do it poorly, and it takes you 10 times the amount of time that it should have, or you could hire a professional who's going to do it right the first time a lot quicker. And yes, it costs you money, but it saves you much more money in the long term than trying to do it all on your own. And plus, when you're trying to scale, like there's only so many toilets you can fix at the same time, only so many rooms you can paint, only so many residents you can show, to give tours to. But with property management and with the right team members in place, there's really no limit to how many units you can have.
Yeah, I liken that thought process to appliances on large scale rentals also, because I see a lot of people that keep trying to fix old appliances. And I'm like, the new appliance isn't that expensive. Like, just get the new one, because you're just creating more phone calls when you can't fix something the right way the first time.
Yep. Although I will say the older washer and dryers are easier to fix than the newer ones, and they last a lot longer. So there's that. And they're not as energy efficient as the newer ones, but they're dinosaurs, but they keep on chucking.
Yeah, I feel like all products these days, which does play into what you're doing as landlords for all of us, like they're built so you can't fix them. There's no way you have to do some calculation or get an app to fix them, and that doesn't help long term. So when you went from your first one to your second triplex, did you refinance and then use another FHA, or did you buy that second one as an investment?
I bought the second one as an investment.
Yeah, and it helped by having the 3.5% down on the first one and keeping your W-2 to be able to do that, right?
Yeah, exactly, to get approved, because they were all personal guarantees, for the mortgages.
Yeah, I'm sure you found this as well. I think new investors or people who want to be a full-time investor and get there often are jumping from the W-2 too quickly. And it's like, no, you need the money. That's what helps you get through the first couple units until you have those as income to tie on to future properties. Where did you first learn about syndication? Was it part of Rich Dad Poor Dad, or Rich Dad Poor Dad was the thing that just turned you on to investing?
Yeah, it wasn't, or at least I didn't see it in any of the Rich Dad Poor Dad books. I haven't read all of them, and there are quite a few actually now. But it was at the point in my life in 2019 when I realized, man, the scaling is going so flippin' slowly. I need to figure something else. So I took a nice big slice of humble pie and decided, okay, I need to start learning from other people and working with other people. And so I started diving into books and podcasts and going to meetups and really getting involved in the community where I was separated from before. And that's when I learned about syndication, just through a podcast. And then I went to a meetup that there was a speaker that was talking about syndication. And I was like, man, this guy knows exactly what I need to know. So I figured out how I could add value to him first. And then he has added a lot more value to me in the end as well. So I've learned a lot about syndication. I'm an LP in a few deals. I've done some capital raising for another deal this past year, 229 unit in Kentucky, and looking to do more capital raising going forward.
Yeah, and you just made a really, really important point. I don't want the listeners to miss it. When you wanted to get that mentor, you said, how can I add value to him? And I think that's what a lot of people who are looking for mentors miss. They just want the mentorship, but they don't actively seek a way to be an asset to someone else. What did you do in that context? Was it your skill set or things that you could bring to the table that allowed someone to say, it is a good use of my time to have this mentor-mentee relationship with Matt?
Well, for my situation, during that presentation, I saw that he was having some trouble with technology, with PowerPoint and Microsoft Excel for showing a data analysis underwriting. And so I went up to him after the presentation because I'm fairly computer savvy. And so I said, here's how I can solve your PowerPoint problem. And here's how I can solve your Microsoft Excel problem. And of course he was going yeah, actually that sounds great. And so then, sometime later he contacted me with some other computer related stuff that he needed help with, and I helped him, and it just kept on rolling from there. So anything he needed, I was there for him. So then I joined his mastermind, and and with mentorship, like you said, you have to add value to other people first, whether they're a mentor or other potential business partners or whatever. And whether that's as a mentor, you can hire somebody. You can just pay somebody to be your mentor and teach you all the ins and outs. Or if you don't have the money, you can figure out a unique way to add value to them. It doesn't even have to be real estate related.
Yeah.
Like let's say you meet somebody who wants to learn how to play the guitar. You just learn that by talking to them, and you know how to play the guitar. You can offer to teach them for a few lessons or whatever. So add value first, and then it all comes back around.
Yeah. Did you find a big, increase in the time that it helped to scale by getting into that like mastermind and meetups? Because I've found that we do a once a month in-person meetups, and we've just found that people can go so much quicker, not because they're getting rushed anymore, because just from a podcast, but they finally meet other people who are trying to do the same thing, people who have just done it, people who've done it longer, and then people who are behind them. So then it's kind of like all cycles. You can help people get helped. And like you said, you're kind of all working together, adding value to each other. Did that help you along the way?
Oh, absolutely. And I guess that's kind of one of the most surprising things about real estate that I found when I got started. I was expecting it to be all cutthroat and everybody trying to undercut each other for everything, but it's really not. Like, maybe for, fix and flippers or something, trying to get a deal. But when you go bigger, everybody wants to help each other. Like we're sort of all in this together. There might be some, challenges for a particular deal, but overall, people want to help you as long as you want to add value to them. And so lots of warm fuzzies in that sense in real estate. And with the mastermind, you get a little bit of synergy. You're with other people that are about the same level of you, and you're all learning together and getting access to their networks. And with the main person in the mentorship, you're getting access to their knowledge and network as well. You are going to scale and achieve your goals a lot faster by being in a mentorship or a mastermind or meetups. Just working with other people, it gets you a lot farther faster than you could on your own.
Yeah. And I think one thing that people forget is there's always a mastermind higher than where you're at, especially in investing. You can do a lot, but there's always going to be a subset of people who have done more. And like you said, you had to get out of your own way kind of in order to get to the scaling portion at that time.
Yep, exactly. And if you hire a mentor or a coach, they also have a mentor or a coach as well.
Always.
The top performers in the world have mentors and coaches.
Yeah, absolutely. So when you started to think about syndication, you made those relationships. Did you get into the GP phase first and you wanted to raise money, or were you an LP first in somebody else's syndication to kind of learn?
Yeah, the LP at first, and I think that's a great way to get started with syndication, so you can see how it's run, where you're not responsible for any of the ins and outs of things. So you can see, like, okay, what is this syndication sponsor doing right when it comes to investor relationships and communications and how they're underwriting and operating the property, and how could I add value for a future deal if I'm going to be part of the GP, if that's what you want. But then I found out about what's called fund to funds for capital raising. And I don't know if one of your previous guests has talked about this, but it's essentially like, so I'm looking at starting my own fund, and I'll raise money from passive investors. But then what I do with that is I go to the syndication sponsors that I know and like and trust and know that they're going to do good work because I've vetted them, and I can vet their deals as well to make sure that they're quality and going to work out. And then I can take that chunk of money from my investors and negotiate with these people to say, like, hey, if you want this big chunk of money through the fund, you're going to have to give us a little bit better rate of return than you're giving to everybody else who's only given 50,000 or whatever versus my $1 million fund.
Right.
And so then my investors, not only do I do the work of finding and vetting the sponsors and deals, but they're doing better through me in the fund than by going directly with syndication sponsors.
Yeah, excellent. When you started to do syndications, and then when you got into the GP phase, how do you rationalize the fact, like, we all think like, okay, great, we're going to get other people's money, but of course in the end it means that you make less than you would make on your own. But of course you don't have to bring whatever $3 million to the table. How did you figure out how to make those numbers work for you?
Well, that's part of the underwriting. So, I mean, not to get too into the nitty gritty of how it works, but generally in a syndication, the GP gets about 30% of the profits, and then the limited partners get about 70% of the profits. And so you have to, based on the deal, maybe change the preferred rate of return or whatever, or like how much capital you need to raise to make it work out, for it to make sense. So it's you have to use a little bit of creativity to make sure your ducks are in a row and whatnot. And I just lost my train of thought.
Yeah, you're all good. So have all of your initial investments, those were in the Minneapolis area?
So my small multifamily, the triplexes, were in Minneapolis, and then the syndications have been in Indiana, Michigan, Wisconsin, although now I'm more focused on finding deals in the Carolinas, Kentucky, and Tennessee.
Yeah, I think that with syndications, it's a little bit different. People are scared of out-of-state investing, but when it comes to syndications, you're always going to have boots on the ground for somebody to look at the property, but like syndications and large-scale apartment buildings are number crunching. Like you're going to crunch the numbers, and then you have to have obviously, verify it in person. But I think it's much easier to be out of state. Obviously, as an LP, it's no problem, but even as a GP, as long as you're betting it, you're just looking at the numbers where you can do value add.
Yeah, exactly. As the GP, you still need to have like quality property management there locally who know the market and are there at the property. And I like the larger multifamily, especially because then you can afford to have full-time, on-site staff for maintenance and for leasing. Whereas if you have like a 10 unit, you can't have a full-time person doing anything for that. So anyway, you have better systems with the larger multifamily. And then as a GP, you're overseeing the property manager, having weekly calls with them, making sure they're executing the business plan appropriately and doing the renovations. And then you should still be visiting the property every so often to make sure, nothing replaces being able to see it physically, because the property manager can show it to you through rose-colored glasses and say like, yeah, everything's going great.
Yeah.
But until you get there physically and you're seeing like mattresses on the lawn and stuff like that, then they're like, oh no, we need to change some things.
Yeah, I think that's even important when the cash flow is going well. I mean, I think sometimes people think, oh, well, the numbers all look good, but the numbers could look better if you check up on it. It doesn't mean that there's not things going wrong there that are being overlooked, confidence in a property management team is tough. So it takes when you're going into these other areas, where are you finding your property managers? It's through other syndicators and investors in the area?
Yeah. So everything's through referrals for property management. And then you always want to have a backup property manager ready to go as well. So if things aren't turning out the way you had hoped with a property manager and you're not able to turn things around, then you have a backup plan. You don't want to be left up a creek without a paddle,
Yeah. And
I think that's, I don't look at the smaller markets. So if there's like a town with 5,000 people and there's a 200 unit place there, if it's not like right next to a bigger metro, I'm not even interested at all, because the likelihood that there's going to be multiple property management companies that can handle that size of property are slim to none in that small of a market.
Yeah. Yeah, interesting. What's the most units at one of your either GP or LP now?
244 beds of senior assisted living.
Oh, senior assisted living. Okay, so how does that differ from some of your other investments? Because it's a different beast.
Yes, it is. And my background in group home management is really adaptable to senior living to understand it. So the operations side of things, I'm well versed on. It's a lot more operations heavy than multifamily.
Yeah.
There's, so you have the staffing is going to be your biggest expense. And it's a little bit different approach to be able to get residents, and the quality of the extra care that you have to provide as well is more intense, but you get more profits as well. And it's, senior assisted living is on a completely different market cycle from where multifamily is. If you look at the population of the U.S. and, the baby boomers are just about at that age where they need to be in more intensive care with senior assisted living, the amount of units right now are not near what they need to be over the next 10 years to meet the demand. So anything you buy right now, you can stabilize and get a good reputation for that property, you're going to ride this silver tsunami really well.
Yeah, and I think there's obviously not enough, and even within the not enough, there's not enough that make people feel comfortable, because I guess when I was growing up, it always felt like, oh, everyone's sending their grandparents to a home, and that it's not fun. Maybe the relatives can't take care of someone, but they can still have separate unit, live as independently as possible. At this site, the one that we were talking about, does that have medical on site as well? Or
yeah. It's actually a portfolio of anywhere from 12 to 36 beds. And so we do have, so there's a property management company that oversees the different locations. And then we have on-site manager at each location.
Yeah.
And then, of course, personal care attendants and then nursing as well to provide the people with care.
Yeah. Is that your only senior assisted living, or do you have others of those as well?
That's my only portfolio, is the 244 beds.
Yeah, interesting. Did your background lead you to that? Because I do think you have a sizable advantage over others with your background to make that, I guess, more palatable and understanding to be able to do it the right way and also make it profitable.
Yeah, I think it's scary for a lot of people because the regulatory compliance is a lot more intense and just the extra care and attention that they need to thrive. But my background it makes it so it's not really scary for me. I'm like, oh yeah, I've been through the ringer before. I understand how this works, so not a big deal for me anyway. And if you want to get into the senior assisted living space, my advice is to partner or invest with somebody who knows what the heck they're doing already. Don't try to figure it out on your own. This is not a good place to experiment with, because you're be messing with people's lives potentially. So having experienced partners who are going to do a good job is the way to go.
Yeah, I agree with that. Let me drop back for a second. So you had mentioned Rich Dad Poor Dad. It's a book, obviously, that a lot of us have read several times over the years. But what was it in that made it a reality to you that you decided to go ahead and then get the triplex pretty quickly after that?
Well, it was the main takeaway, and there's a lot of takeaways from that book, but the main one was separating my work from the money that I make. Trading your time for dollars is one thing that most people do, but making your money work on behalf of you, whether or not you work yourself, is a whole another level that's achievable by anybody. And real estate just happens to be in my mind, the best avenue for doing that. Because the tax advantages, the laws in the United States are made for real estate investors more so than any other country in the world. If you're going to invest in real estate, this is the place to do it.
Awesome. Yeah, it's just everybody takes something different from it, but everybody gets some form of motivation that they can do it and that it's accessible, just from getting through the book, because it goes from young age to older age and just the process of getting through. Let's talk about your mentor, who's also the co-host of your podcast, Pillars of Wealth Creation, Todd Dexheimer. You said that he helped you break free of limiting beliefs, which I think is a big problem for a lot of new investors. How did he help, and how did your relationship kind of get you guys going and help you get through? And then tell us a little about the podcast as well.
Yeah. So I guess the major limiting beliefs that he helped me with was understanding that I was getting in my own way, like you mentioned earlier. And part of that is when you think that oh, I can only invest in triplexes or single family or whatever, you're right. That's all you can invest in. But if you think you know what, I can actually go bigger. I can invest in 20 plexes or 100 units or more, then you're absolutely right. Even if you don't know how you're going to do it, if you believe you can, you're going to start to take actions to figure out how can I do it? Or better yet, who can I work with to make these goals happen? So that's probably the biggest thing there. And then, so he helped me understand how I could actually take the action steps and who I could work with to be able to scale up a lot faster than I could, trying to figure it out on my own.
Yeah. I mean, we talked about it before with the mentorship and the masterminds, but the who is really important, just like you are the product of the 5 people you spend the most time with. If you want to become that big investor, you need to be around big investors, or else nobody else knows how to do it. We can, if we're all at the same level, we can't really get to the next level because we don't know what it's going to take to get there and what it looks like when we get there. Those are great points. Most important trait for a real estate investor to have, you said persistence. Describe it from your point of view in your experience as an investor, because it can be debilitating. Like, not all deals go correctly. Things happen all the time in real estate that we hope wouldn't happen, but you have to keep going. How has it helped you? And how do you think it can help other investors to know going in, like, this isn't a short-term thing. I gotta stick with it.
Yeah. I mean, it's, I've heard the analogy of like trying to grow a tree. Like you have a sapling and you come and you dump a bucket of water on it each day. And each day there's really no difference. It's still a sapling, and it takes years of that repeated watering over and over again, that effort, until finally one day, it's big and strong and it's producing fruit. And then it's just going to keep on producing fruit from there. So it's a lot of effort in the beginning to build things up over time. If you're expecting like instant results, like you started this podcast, and when you started, you didn't have 1 million subscribers. It takes time to build up, just like real estate. And by having the perseverance to go through the challenges that so many people, I think, start real estate and they're like, oh, this sucks, and then they quit. But if you persevere through those trying times, it gets easier, or at least you know how to handle the problems much better. You think back on when you were a kid and you you stubbed a toe, or somebody called you a bad name or something, it ruins your day. But now you're like, man, whatever, you shake it off. Yeah. It's the same with real estate. The more problems you encounter, the easier it becomes. And then eventually you have a bigger capacity to handle bigger problems and achieve greater results. So you keep persevering through the trials and tribulations that are inevitable, and you'll achieve your goals after that.
Yeah, I love the tree analogy. I always use the analogy with my team and with other investors that most people stop. Like if you see a big hill and you see somebody pushing this big rock up the big hill, it's always the people, they get it like they're like 1 inch from the top, but they don't realize it. And they're like, oh, you know what? This is too hard. And they let the ball roll all the way down to the bottom. If they literally just pushed it to for 20 more seconds, it would have gone over the top. They would have had momentum. Like you said, the tree's going to produce fruit. But that's why you have to know it's good. Like what you're saying, know going in that this is a long haul. I mean, if you're in the short term for real estate investing, you've really listened to the wrong podcast, because there's none of us who want to do this for 5 minutes. That's not going to be successful at all. This was a great answer that you had. I always put in the question, what's wrong with the real estate investing world right now? And you spun it into a really positive spin here. The vast majority of the public doesn't know that real estate investing is within their reach. What did you mean by that? It's great. And I agree. It's really available to everyone at some point.
Yeah, I think just people don't know about it. Like school teaches you to fit into a box of the, how to be a good employee and essentially be somebody else's passive income. Whereas, having the idea of like, oh, I can create a system or cash flow for my own passive income, whether that's be through, investing in businesses or stocks or in my case, real estate, it's not rocket science. I mean, you don't need special degrees or experience or whatever to get going. All you need is, learn, educate yourself a little bit, network with other people in the field, and take action. And, it's just like, being able to run a race. If you have the use of your legs, like, if you're not even close to being able to run a 5K, you start up like a Couch to 5K app, and like you start like, walking a little bit, and then, jogging a little bit, and then jogging a little bit more. And then pretty soon, after so many weeks, then you're like, oh, now I can run a 5K. You got to build up to it, but it is achievable.
Yeah, absolutely. Let's talk about your book. You wrote a book about real estate. I think, you'll correct me if I'm wrong, but it's a conglomeration of what some other books have said. You kind of summarized it all into one big package. Tell us a little bit about that.
Yeah, it's the kind of book I wish existed when I first started investing in real estate, because there's so many different ways to invest in real estate, and you can make money from any of them. So it's hard to decide in the beginning, like, which one do I do? And if you try to do them all, you're going to do it all poorly. So what I did was I researched, the different ways of investing in real estate and found what I thought to be the best book about each of those avenues. And then I summarized it and just got down to the meat and potatoes of the quality information from that, kind of condensed it down to a chapter worth of material. And so my book covers, 20, over 20 books about real estate investing, about the full spectrum. So that way you read through this and decide which particular avenue is right for you, and then go with that versus trying to do it all.
Yeah, I liken that to podcasts. Like when people say like, I'm going to start listening to Bigger Pockets podcast. And I'm like, well, there's a lot of episodes. Like if you're brand new, maybe like skip the syndication ones because you're not there yet. You've set it up so people can go chapter by chapter and say like, okay, well, I'm interested in multifamilies, but also it gives them the opportunity that they can just learn a chapter. They don't have to go down a rabbit hole that's going to be like an entire class on multifamily when they're, don't even know really what they want to do. Yeah, that's excellent. I think the synopsis definitely helps. Just gives people an opportunity to get like a quick glance at what each thing is, and then, decide if they want to do more due diligence on that as well.
Exactly.
Tell us about your company, Hawkwing.
So that's where I'm doing the capital raising for deals, to be able to diversify people's investment options with different markets and different types of deals, but primarily multifamily and senior assisted living.
Yeah, what have you found the hardest thing to raising money has been? I've talked to other guests about it, and I think when you're thinking about it, it's hard to figure out how you're going to get other people's money. But once you do it, you start to figure out what to do. But what's been the hardest thing, and then maybe what's the thing that you figured out that has helped to make it a lot easier?
I guess I'll combine those two because that's another one of those limiting beliefs that my mentor Todd helped me with. Instead of trying to sell people on investing and try to get their money that way, you have to do a mindset shift of being like, no, I'm not trying to like close them on this transaction. Rather, I'm sharing opportunities with them. So if you're, offering people like, hey, do you want to join in with us to make some money together versus like, hey, I need your money now. That's a much better approach.
Yeah, I agree. And I mean, it's principles of neuro-linguistic programming, but like as an honest person, it's just inviting someone to do something with you, like you said, instead of saying, can I have this? I'm going to take it from you. I'll give you something back later. It doesn't feel the same. And I think the language around, I guess, pitching and raising is really, really important because you want to create that kind of atmosphere where like, we're going to do this for you. Because for LPs, they really don't have much control, but it's much nicer when you're an LP to feel like you're a part of something good, even though you really can't change anything about it.
Yep, for sure.
Yeah. So when I think one last thing I want to touch on that I think was really important. You said that you became an LP first before you became a GP general partner, and that helped you see what went right, what went wrong. Is that something that really helped you as you start raising, knowing what you want to do as a GP because you've had the opportunity to be a part of a few and review them?
Yeah, exactly. Like I mentioned before, it helps you understand what you should expect from a syndication sponsor or a GP for communication and, just how the whole deal works with, your returns and things like that. So you know what to expect, and then you have a better idea of what to be able to provide to other people in the future.
Excellent. Matt, if you had one piece of advice for new real estate investors in today's real estate climate, what would you tell them?
Don't try to do it on your own. Real estate is a team sport, and so you need to network with other people and find business partners and coaches and mentors and masterminds and be part of this community who will want to help you. And but again, you have to add value to other people first, and that's going to propel you a lot faster than you can on your own.
That's it. That's a great one. Best place for people to find you, is that at hawkwingcapital.com?
Yep.
And then you guys you have Facebook page, LinkedIn. We will link to all of those. You had an extra link. You have something available through your website, right? Oh
yeah. I'll, for my book, I have one of the chapters that I'll give away for free to your investors. And that chapter covers the loopholes in real estate investing. So that's actually my favorite chapter.
Awesome. So that you can get at www.hawkwingcapital.com/free. FREE. Matt, it's been an absolute pleasure. It's great to meet you, and it's good to connect. I look forward to staying in touch with you.
Sounds good. Thank you much.
All right. Thanks so much. This has been episode 31 of Zen and the Art of Real Estate Investing. We'll see you next week.